Hello, and welcome to the Trading with Ashley Retire On series. I think you like these so much because a lot of the stocks that I'm sharing with you that you could actually retire on by selling both puts and calls, they resonate with you because some of you just had these stocks sitting in your portfolio gathering dust. In fact, when I started trading the wheel strategy, it was from stock that I had already accumulated. I had been holding onto it for years. And I just started selling covered calls on it, and I realized the power of selling options. And so, what I'm going to talk to you about today is awesome because you really don't need what the brokers tell you. They will tell you that you need, oh, maybe 1 million, maybe 2 million to retire comfortably. And I know why they tell you that. They want you to make sure that you let them hold onto your money because remember, these brokers, they are getting a percentage of everything that you hold in your account with them. They scrape off a percentage every month, whether you make money or not. And so, of course, it is going to benefit them if you keep your money in the broker. But what I am going to show you is how you can create income for yourself. So here's an example. $250,000 will allow you to run the wheel strategy on Tesla. Now, with just selling puts and calls on shares that you own, I am going to show you how, at today's pricing, you could produce almost $80,000 off of that $250,000 account. I know it sounds hard to believe, but Tesla is an incredible stock that offers wonderful premiums, and you can use those premiums to live off of. It goes into your broker account. You can have a debit card attached to that broker account. This is exactly what I do. And you can go to the grocery store and buy groceries with the premium that you're creating. But here is why I am so bullish on Tesla. So, I have a bustling trading community, and I am so excited to share that yes, four of my members have made enough from selling puts and calls in my community that they are now paying cash for a brand new Tesla this month. Well, what's the big rush for this month? Well, as most of you have heard, the $7,500 incentive that you get when you purchase a Tesla, there's certain models that applies to, that is actually expiring. And there is this rush to actually go and buy a Tesla with everything that's on the horizon with unsupervised driving that's coming, and even the supervised driving. What it offers is so attractive to those that have been wanting to get into the game. They are hurrying to go ahead and get those orders in before the end of the year. And then a lot of the different options that they have right now, they're even offering like 0% financing. So those two catalysts are creating this buying frenzy on Tesla. Well, how do I know that the desire's there? Well, I myself fell victim to the FOMO. I definitely wanted to get my Tesla before the end of the year. So, as a Christmas present to myself, I have ordered a Tesla. I'll be taking delivery here soon, and I'll be glad to share that with all of you so that you can see how it works for those of you that haven't driven a Tesla before. I do want to know from those of you that have a Tesla, I would love to hear your experience in the comments section. Would you please share with me how it has been, especially the features that are offered, such as the self-driving, and I love the feature that they talk about a lot, being able to summon your vehicle to pick you up at the entrance of maybe the grocery store or wherever you're going. I think that's a really cool feature. I'm excited to use it. All right, getting back to all of the buying frenzy that I'm just seeing within my community. Based on that, I can only imagine what quarter 4 sales are going to look like for Tesla when they report in quarter 1 of next year. And if my thesis is correct, everything that Tesla has going for it, coupled with an incredible quarter of vehicle sales, primarily fueled by this buying frenzy we're seeing right now, should do really well for the stock. And so what I'm going to take you through today is something to consider. I am going to show you the optimum entry for Tesla at this point in time, and I am going to illustrate for you how you can split up your $250,000, purchase the shares, start selling covered calls, and what price you could begin to sell cash secured puts with. And we're going to look at how much money you can actually create doing this. Now, I am so passionate about retiring with the will strategy that I am actually planning a free webinar where I am going to teach any of you that are at that point and you're ready to retire. I am going to be teaching you how to use the will strategy to actually produce this income that I have been showing you. So I want you to be looking for the details for that. I'll be posting it here in my next few videos so that you can sign up for that. Also, go ahead and sign up for my email list. I will be sending out all the information through email on how to sign up for that free webinar. It's a great opportunity I don't want you to miss, so please go ahead and sign up for the email. Now, let me get the disclaimer out of the way. I am not a financial advisor. You must do your own due diligence. And if Tesla were to drop dramatically or go to zero, you could lose 100% of your investment. Now that we have that out of the way, let's go take a look at Tesla and look at its current performance. Looking at the current price action of Tesla, now this is of December the 9th, one thing that stands out to me is the range width. It is about 3.74%, meaning Tesla will move up or down almost 4% in a given day. And that is what's creating the wonderful volatility that is allowing us to get such great premiums on the stock. So that's important to note. Now let's go look at the technical analysis on Tesla and see what the best opportunity may be for you to sell covered calls. Most of you listening to me actually have Tesla in your portfolio. However, if you don't, then you could acquire the shares. Right now is not the best time to buy the shares, and I want to show you why. You see right here, we are on the outside of our 6-month Bollinger Band. We're at the top. We've actually come outside of the band. And when that happens, then we are looking for a potential pullback on Tesla. And also look down here at the RSI, we are over 70. And when that happens, we're in an overbought situation for the stock. Now, if you already have the shares, now is an incredible time to start selling covered calls because we can anticipate a potential pullback, meaning it more than likely will not get to your strike price. If you're starting from scratch, this is how this would work. So if we take our $250,000 account and just split it down the middle and look at how we can do each of these strategies, the first strategy is going to be actually selling covered calls on Tesla. So if you don't have the shares and you did want to proceed with purchasing them today, I think you're overpaying for them, but for the sake of this example, let's assume that you buy 300 Tesla shares at $400 a piece. That's going to cost you $120,000. Well, now what do we do with those shares? All right, so you've seen now that we are at the top of the band and we can go look to sell covered calls a month from now because we're trying to produce monthly income. You can do this weekly, which a lot of people enjoy that, but some people just don't want the maintenance of weekly. So we're going to go look at a monthly call on our 300 shares and see how much we can produce in income. Keeping in mind, we want to go higher than 400 because, one, if you're acquiring the shares at 400, you definitely want to go higher than that. But again, we want to hold on to our shares to keep producing income, and we want to shoot much higher than our current share price. Once we get to our option chain, we want to select a date about a month from now. So I am looking at January the 17th of 2025. Now, puts are on the right, calls are on the left. So let's go look on our option chain, and we know we're going higher than 400. All right, so here's 400 right here. You see here there's quite a bit of open interest right here and volume. You've got 45,000 in open interest, 25,000 in volume. But one thing to look at here is that 0.5 delta. This is saying that there is about a 50% likelihood that by our date, January the 17th, that this strike price is going to be breached. So remember, we want to hold on to our shares. So let's go and search for something around a 0.2 delta so we increase our odds of holding on to our shares and we can enjoy the price appreciation. I like this 470 strike right here. If you look, there's quite a bit of volume and open interest, but what's most attractive right here is this delta. It's a 0.23 delta, and that's a reasonable delta for a stock like Tesla that's in a very bullish mode. And look at the premium. It's $10.53 a share right now. So if we have 300 shares and we're selling 3 covered calls, then that is going to produce $3,159. And the beauty of this potential trade is if you were to get your shares, let's say you went ahead and got them at 400 and they rose to 470. If it did breach your strike price and the shares were called away, look at how much money you will make on the stock appreciation alone. In addition to all the premium that we just created, if these shares are pulled away from you, that would be a $21,000 stock appreciation in 1 month. So that's pretty exciting, but I'm not even using that in the equation. But I just want you to be aware of the power of getting a stock at the right price and having it rise and having it called away at the right price. It can do wonders for your overall portfolio and the money that you're working with. So now that we've got that out of the way, we've got our $3,159 from selling the covered calls. Now we want to take the other portion of our $250,000 and go sell cash secured puts. So if we spent $120,000 to acquire our shares, that leaves us another $130,000 to work with. Going back to look at our technical analysis, let's look at a decent entry price if we wanted to acquire additional shares by selling puts. Well, the first thing that stands out to me is right here, this middle line right here. This is your 20-period moving average, and it sits right here at about 346. So when a stock is over 50 on the RSI like it is right here, this 20-day moving average serves as a decent level of support. So if you were to acquire the shares at this level, you wouldn't feel like you were overpaying for them. And then there's quite a bit of runway up above as you go up the Bollinger Band. So let's keep this in mind as we go look on the option chain and try to select the right strike price to sell our puts. If I go right to the $345 strike, I really do like this one. This one has a 0.2 delta as well, and there is some open interest in volume, so you know we'll get a potential good fill on that. So if you've got 130,000, let's see how many puts we could sell at this $345 level. So we would take 130,000 and we would divide it by 345 because that's how much it will take to purchase the shares, and that equals 376 shares. Now we have to sell these in lots of 100 when you're looking at selling puts and selling calls. So we'll only be able to work with 300 shares, but that's okay because that gives us a little bit of extra money for other items that we may want to work with. So if we were to sell 3 covered calls at the $345 strike, look at how much money we will make. This is pretty awesome because we will get another $10.97 a share. And if you multiply that by 300 shares, you're looking at an additional $3,291 to add to what we already made on selling the covered calls. That was, remember, $3,159. Now we are looking at a monthly income from the premiums alone of $6,450. If you multiply that amount by 12, that is going to give you a little bit over $77,000 a year in income. And remember, this does not count the stock appreciation. This is premium alone. This is pretty impressive, and this would be a very good cushion for those of you that are considering retiring and you want to supplement your income. Now, if you found this video helpful, please do me a favor and just share it with one person that maybe will be inspired to actually start doing this for themselves. And I have heard from so many of you that you are making thousands of dollars employing some of these strategies. And that makes me really happy because really the whole reason I wanted to start a channel and to actually share all of this was because I believe that all of us can be a part of this game in Wall Street. It does not have to just be reserved for the brokers that want to scrape off from our accounts come rain or shine. I want you to be able to do this for yourself. Remember, if you are with Trading with Ashley, there is no trader left behind. Now, if you want to see another one of my Retire On series videos, you can watch that right here.